Hello and welcome to season 3 of Finance Ke Fun Day. In today's episode, we'll talk about why stock prices fluctuate, what makes a share go up and what makes a share come down. Share market is also like a normal market. There are buyers and there are sellers. We have two major exchanges, Bombay Stock Exchange and National Stock Exchange, where these transactions happen. We often see our share price continuously going up, delivering maybe 40-50% return in a matter of few months, sometimes even weeks, at times even days, and sometimes hitting the upper circuit 20%, 30% in a matter of few hours. Why does that happen? This situation generally arises when there is a super positive news around the company's future, the market. Stock market works on expectations of the future. They take into account the current situation but also consider how the company might perform going forward. For example, if a company wins a huge contract which may lead to higher profitability in the future, a lot of investors would be interested in buying this company's share. In order to convince the existing shareholders to sell their shares, they would be willing to pay a slightly higher price than the prices which are currently prevalent. This is how stock prices start climbing up. Similarly, in a situation where there is some negative news around the company, a lot of existing shareholders would not want to continue holding shares and they would try to sell it off as soon as possible. In this case, they are willing to sell it at a price slightly cheaper than the current price, and which is how the stock prices go down. In short, the entire price situation is influenced by the demand and supply situation. If there is high demand, low supply, prices go up. If there is low demand and high supply, prices go down. There could be several factors affecting the company positively and negatively. We could start at an economy level where we could say that the country as a whole or the economy as a whole is gradually progressing and accordingly all the sectors of the economy will also progress. Same way, we can also talk about individual segment progressing. So for example, if you're talking about an automobile company, we can say that the auto sector has a huge potential going forward, because of which auto stocks may continue to go up. We can also talk about a specific company getting an extra order, getting a cost saving, anything which could lead to higher profitability in the future or lower profitability in the future. If expenses go up more than expected without an increase in revenues, going forward, the company may have to lose out on the profit, because of which the share prices may go down. Regulatory environment, legal environment, political environment, economic environment, technology, everything influences the companies. And the analysis or the estimates which people draw from them help them decide what price would be appropriate. There are both fundamental and technical analysis which is done on stocks to decide what is the fair value for the stock. We try to buy stocks at a cheaper price and sell them at a higher price so as to get gains from them. Hope this video was useful. If you liked it, please do share it with your friends as well. Do not forget to subscribe the channel to get more such informative videos in your feed. Thank you.